Let's get a quick check on these numbers for you. Q1 adjusted EPS, 478. Street was closer to 395. Q1 revenue, 13.64 billion. Street was closer to 12.95 billion. So beats on the bottom and the top there. More importantly, let's get to the guidance. Q2 EPS, 822 to 862. The street was at 471. And it looks like revenues here, they're calling for between 18.3 to 19.1 billion. Consensus was 14.38 billion. So that is a big beat. Gross margins, they're calling for between 67 to 69%. Street 55.7%. So beats there versus consensus. You won't be surprised to see that stock surging more than 5% here initially after hours. Keep in mind, this stock was already a rocket ship this year. It was up about 170% this year heading into the print. Despite that move, around 85% of analysts still say this one's a buy, even after that move. Why do we care about Micron? Because it is the largest U.S. memory chip maker. Those chips go into a whole bunch of products. So think smartphones, PCs, data center. You get a read really on the health of those verticals, those end markets. One area of focus, of course, high bandwidth memory, HBM. That's a kind of chip that's needed for AI software training. Micron sells HBM. It's a higher performing chip. It's better pricing and margins. Investors have been very excited about that. Micron, at least initially here, they like what they hear in the after hours. We're up 5% here initially in response to that print.
Joining me now, Paul Meeks, Freedom Capital Markets Managing Director. Paul, it's good to see you. I mean, this has been another extraordinary story in the semiconductor industry in terms of the change that AI has had on this business. What do you think about Micron and the sort of runway this now has?
I think there's plenty of upside in the stock. Now, would I buy a stock that is up 11% in today's session on the heels of this report last night? Probably not. But on any dip, this is an extraordinary opportunity because this is an industry that is an oligopoly, right? It's Micron and two South Korean players control about 90% of the share. As a group, they are acting rationally when it pertains to adding capacity. In the meantime, the high bandwidth memory business is soaring. And I'm contrarian here, but I think the AI infrastructure build continues for at least another year, probably two. And so I think there's upside in their earnings estimates, which are already annualized at about $34 a share to this name. So I think $300 is an achievable price target, and it may even go higher.
Well, and indeed, the company says that all of its high bandwidth memory is already sold for 2026. So they're certainly seeing that demand come to fruition as well. How does this sort of change the dynamics in the memory market? I mean, as you mentioned, it's an oligopoly. There are two other players. We've seen memory prices go crazy, not even the high bandwidth kind, the overall kind that goes into all kinds of devices. So what are some of the sort of knock-on effects in the industry that you're watching and other names that you're watching?
So I continue to like the people that are benefiting from the spend. I recently initiated coverage with CoreWeave, which is one of the neoclouds with a $100 price target. But believe it or not, I think there's upside in NVIDIA, Broadcom, Taiwan Semi, some of these companies that when I get pushback, what people will say, how can you possibly recommend NVIDIA after it's done so well for all these years? Well, it's because I see even more greatness ahead of them. And, some of these stocks, Julie, have come down quite a bit in the last couple of weeks. I think it's a good buying opportunity for several of the names.
I'm curious about the neoclouds in particular, Paul, because there have been some questions about that business model, right? That if you're, renting space from someone else, if you're trying to go out to the smaller providers as your clients, then maybe you're a little more vulnerable if there are chinks in the armor of this whole AI thesis. What do you think about that?
Another excellent question. The way I look at it is you have to look at these contracts that they are signing very carefully. In the case of CoreWeave, we have 5 and 6 year deals with well-funded folks like Microsoft and Meta, and They're paying 15 to 25% of total contract value upfront, so there's some initial cash flow. And so I think that even though some of these companies are levered, and CoreWeave, mind you, is highly levered, that they have a nice runway. And I think that over the next couple of years, their plans are set and they're funded by the most well-funded companies almost on planet Earth. And the other thing that's interesting about CoreWeave, it has an interesting deal with NVIDIA, which is also a 6% shareholder, in which if CoreWeave has any surplus capacity between now and April of 2032, it'll be sopped up by NVIDIA. So some people will say that's a quote unquote circular deal, but I actually like that deal a lot. And so I do think there's upside. Yes, it's speculative. Yes, they're highly levered, but I think that this is all under control as long as the spending from the big boys continues. And I think all these companies, when they announce their results in January or February, will confirm at least the 2026 capital expenditure spend.
Paul, are there any names that you would avoid right now that you do think bring higher risk, or the valuation is just too high that you don't think it's justified?
Well, I'm interested in the guys that are getting the money, not the guys that are paying the money. And I get a lot of questions about Oracle because it's down so far from the top. Can it be a better buy? I don't think so. Of the two majors that announced last week, I very much like Broadcom, very much do not like Oracle. And you have a number of these software as a service companies that were all the rage back in the 90s, companies like Salesforce.com. I'm not convinced in the AI era if they're not just disintermediated. They'll all tell you publicly that they're transitioning well to the AI era. I'm not so sure, so I stay away from them.
I appreciate it. Good to see you. I think I saw one quote this morning, Dan Howley, that these numbers were even more of a shock than NVIDIA's shock when they first started reporting what was going on as a result of generative AI. I mean, these numbers for a memory chip maker that tends to be sort of commoditized product are indeed very surprising.
Yeah, Julie, they beat on the top and bottom line easily. They came in with EPS of $4.78. The expectation was for $3.95. They also beat on revenue, $13.64 billion. The estimate was for $12.95. But really the standout here was the outlook. The outlook was absolutely bonkers. The original estimate was for $14.3 billion. They estimate that they're going to have in the next quarter 18.3 to 19.1 billion. I mean, that's just absolutely insane to see those kinds of numbers coming through. Okay, so what's the deal here? Why is this happening? Well, it's a huge demand for memory from data centers. And so, this is a part of the AI trade. The stock is trading right now, well, in pre-market. I can't even tell right now, but it's been up all morning. I think 15% around there. And so, the idea that these kind of memory makers are now starting to explode, that tends to lead to, okay, so now we're going to see more data center build out because you need the high bandwidth memory before you can actually get anything into a data center, before you can build a server rack. There's, the upside and downside here. There's the AI trade's been kind of on the downswing. Now, is it going to go on the upswing? There's this back and forth. The other thing is what this means for the average person. We discussed this, I believe, last week or a few weeks back, where the increased demand from data centers means that, well, memory companies are just going to build for data center companies because they can get better margins. Micron said that they're sold out of high bandwidth memory through calendar year 2026 already. And so what this means for the consumer is you might start to pay more for your smartphone, your laptop. Companies may have to pay more for equipment that they purchase. This memory, not exactly high bandwidth memory, but the type that these companies make, DRAM, is found in anything that's basically a computer. So cars, medical equipment, consumer goods. Your washer and dryer has RAM if it's got a computer in it, which it probably does. Mine is very old, so it does not. But the point being that you're going to have to end up potentially either paying more or seeing companies downgrade some of their devices to allow for the amount of RAM that's available to be used. And so, good for AI companies, bad for regular consumers.
And Dan, and Micron is actually migrating most of its supply to high bandwidth, right? What's the timeline for that, and how much are they still relying on the sort of more regular DRAM versus the high bandwidth memory?
Yeah, they're killing their consumer brand Crucial. That's been a brand for memory for years. I mean, I love computers. I've used Crucial memory in my machines that I build myself. And so it's interesting to see that by February they should be exited that market entirely. And so, it just shows that companies are going all in on AI data centers. And I think if you're an AI kind of believer, it shows that, look, this is going to be huge. It's going to continue to be huge. If you're not and you're a little more skeptical, you think, well, why did Micron just exit a market that they could make money off of? So, it's kind of A, B. We're going to continue to see this back and forth. One model's better than the other. OpenAI is beating Google. Google's beating OpenAI. NVIDIA's incredible. NVIDIA's on the downswing. I still don't think anybody understands where the AI market's really going at this point. And so these kinds of ups and downs just feel like they're going to be par for the course now.
Well, for more, we're bringing in William Kerwin, Services Equity Analyst at Morningstar. William, the stock is up. That follows, as I said, a monster move in 2025 heading into this print. What do you make of the results?
Well, Josh, these are monster numbers in the guidance, as you said. It was not only a beat on the results they reported for their fiscal first quarter, but really this is a story about the guidance and just how much higher this pricing can go. And so the dynamics that we're seeing here is these are commodity-like chips. Memory chips can be produced by a lot of different players in the world, but there is a limited supply here. And there is so much demand for these chips to go into data centers for AI that it becomes supply constrained, and then the prices just skyrocket. And so we think that's what's happening here in this really impressive guidance that drives revenue up. It also drives those profit margins to, frankly, ridiculous levels in the 60% range, as you said.
A key question, William, I know you talk about this in your research for this name, is how we think AI impacts DRAM and NAND cyclicality going forward. How do you think about that? As a financial analyst covering the name, William.
Well, we still think this is a cyclical market long term. The way that I've been describing it is that AI is creating this particularly strong, and especially as you look at the Q2 numbers, an exceptionally strong and particularly durable upcycle. But we still see it as part of a cyclical long-term end market. This is all about matching the ratio of demand to supply. And what we've seen over decades in the memory market is that when there are mismatches in that supply and demand, and you get into a period of oversupply, so if all of these memory chip makers start building capacity to fulfill this demand and they overbuild a little bit, that's when pricing can crater and really have the opposite effect of what we're seeing now, where growth and margins go severely down. So we don't see that happening in the short term, but long term, which is our focus, we still see this as a cyclical market, and this just being a particularly strong upcycle.
So if memory does remain cyclical, William, then pricing declines will return. How, as an investor, do I prepare for that? Or what signs and signals am I looking for to get ahead of that?
Well, that's exactly what we think. And it's hard to put an exact time on it, but we came into the print tonight a little bit bearish on the name, at least in terms of valuation, where we think if you're buying in at today's prices, you're really assuming that this environment where prices are going up rather than down, as well as demand going up, is going to last for a significantly long time. We think it'll last into the short term, but again, that longer term view of cyclicality keeps us on the sidelines for a name like this, at least heading into the print, and then we'll have to crunch the numbers tonight and see what comes out.
William, how do you think about the competitive landscape for Micron, Samsung, SK Hynix? How has it been shifting? What are Micron's advantages?
Those are the big three, and I described these products earlier as commodities, and that's really what memory chips are. So these are very advanced chips, but what Micron produces, what SK Hynix produces, what Samsung produces, generally we view as fungible, and these three firms being at similar paces of technological development. Now, you mentioned HBM earlier. That has been a slight paradigm shift in that dynamic where Hynix has really taken the lead, and we consider Micron to be a number two there. But longer term, we expect Samsung to make up its progress and again create this fungibility across the three firms. And that's what creates market-driven pricing dynamics, and those can lead to either a volatile cyclical downturn, or as we're seeing right now, really, really strong pricing that is benefiting all three of these firms.
William, Micron does have China exposure. What does that business look like long term?
Very little China exposure at this point, actually. They had taken a hit about a year or so ago by not being able to sell some of their products into China. So we see that exposure is actually quite negligible at this point. And again, most of the demand here is now being driven by AI data center buildouts in the West, both for HBM and their other versions of these DRAM memory chips.
What would be your top questions, William, for CEO Sanjay Mehrotra? What would you want to ask him if you get a shot?
Well, we want to know all about what they're seeing in the pricing environment, because this is a case where we were expecting pricing to be up, but nowhere near as much as it's guided to be up this quarter. And so I think what's on most investors' minds, what's on my mind, is the longevity of these pricing increases, as I talked about, and really how long this amazing profitability can last and if it can even go higher.
William, thanks as always for your time and that instant analysis. We appreciate it.
Thank you.